Hello and welcome back everyone to the Moneycontrol live stream. You are watching markets with Santo and CJ in association with M Stock by Mirai Asset. Well, it's a wild ride out there. I don't even know, Santo, how to start the show today. It seemed like it was a very good day. It was going to be a very good day in the morning when we had a gap of opening after the US Federal Reserve meeting. And at this point of time, it seems like we're going to head for a nightmarish closing for the day. I mean, if you look at the Nifty and the Sensex, they have both plunged to 52-week lows as risk aversion grips investors at this juncture. Clearly, there is fear, there is uncertainty in the market at this point of time. I mean, Santo, I mean, if you look at the sort of selling we have seen, the small cap index is down 3%, Realty, metals, infra stocks taking a beating. Two important, support levels of 16,500, 15,500 and 15,400 taken out in one go. Clearly, for the option traders out there at this point of time, I just feel they have no other option but to just straddle their way throughout this crisis, because you just can't tell on a given day where the market is going to go.
Well, CJ, now I think the panic is finally beginning to set in. You're seeing some kind of,
even I am feeling it today, Santo.
Capitulation is setting in. If you look at the mid caps and small caps, you're definitely seeing very heavy selling coming out there. So this, I think now probably market is moving into a decisive phase, and we could see the selling intensify in the coming days.
Absolutely. And I mean, the thing is that if you have broken down that, that March low, we all talked about that March low and how that could be a very crucial level and could probably enthuse the bears even more. We have already down almost 200, 300 points from that level alone. So clearly, is there more downside? Now, what is the next level? Is 15,000 the next level? Is 14,800, which will be the 20% drawdown mark from the record highs? Will that be the final, hurdle that we will have to cross before we can see any bounce back, or would you expect more pullbacks to come before we head even lower, from here?
CJ, all said this is a very good time to be actually going out there looking for bargains. If you are sitting in cash, I think, you're never going to, actually be able to catch the bottom, right? And just look for companies with decent earnings visibility and then start, slowly nibbling at them. What happens is, like till a few months back, you were seeing the market overreacting on the bull side. And now what you will see for the next few weeks or months is the market overreacting on the downside. And that is, going to throw up a lot of interesting opportunities. You're already seeing some bit of it right now, this kind of overreaction. I think this will only kind of intensify in the coming days. And in the short term, very clearly, it's going to be technical factors. People are just not going to look at the earnings side at all for some time. It just, some fund faces a redemption pressure, it's just going to come out there and dump shares. It doesn't make any difference what the earnings visibility of that company is. At the same time, one may also have to take some hard decision and, write off some losses. Some stocks, I think this was it. You may have seen the best of them.
Yeah, please don't try to hold on to your losses in the hope that they will recover eventually, because that sort of strategy is going to get you into more trouble than probably booking your losses, having some cash on hand, because you want to be able to utilize that opportunity, when it comes, when the markets are probably at their depths, when there is total fear and capitulation in the market. And that is the opportunity that usually, retail investors would want to take advantage of. And you would want to, you can only take advantage if you have cash on your hands, right? If you don't have cash on your hands, then you will probably be sitting as a lame duck. So clearly a lot of fear and uncertainty in the market. But that said, there were individual stocks which were seeing action. There was some hope for the investor out there on individual counters. Starting off with Santo.
MRPL, now the stock was wasn't great demand till a few days back, and is among the biggest losers today. But CJ, I think it has more to do with technical factors right now. The stock is a play on rising crude prices. Now, while commodity prices have eased a bit, I think the case is slightly different with crude. In fact, it's been quite steady, although there is now talk that because of interest rates going further, usually crude prices tend to come off whenever interest rates globally
if there is a slowdown, probably.
Exactly. So it's more of technical factors which are weighing down the stock at this point in time. The company had a very good year, FY22, which saw a sharp uptick in earnings, and right now, fundamentally too, its stock is looking quite cheap at 5 times trailing earnings. Considering that oil prices are likely to stay buoyant for some more time, probably this is among the stocks that could still outperform.
So Santo, clearly the stock has had a amazing run in 2022. You know, if you look at the gains for the year so far, 124% gains in a market like this is clearly amazing. I mean, those who bought it and made money, congratulations to you. But I just feel that if you're entering the stock now, I think it would be a little difficult to make money on the counter. Clearly, the positives around the earnings have been factored in at this point of time. Another reason why I would think that, you know, the upside would be limited is because Q4 and Q1 probably would be the best quarters that the companies probably will see in the recent past. But Q2 onwards, I feel that the tailwinds that they were getting in terms of, you know, inventory gains because of higher oil prices, higher refining margins, those will probably start petering out from Q2 and Q3 onwards. Clearly, oil prices are already at highs, and they have very limited upside from here. The most optimistic estimate is around $150. So you don't have that much of a runway to go for oil prices. Most likely, they will stay at the levels that they are at, especially as the OPEC is trying to increase output going ahead. Apart from that, if you look at what JP Morgan India had to say, you know, in the report for RIL, I think I noticed this, and they said that global refining margins will probably decline from the current record levels, right? So even though margins had hit a record high, and that clearly aided the earnings of a company like MRPL, that tailwind will also probably peter out towards the second quarter, third quarter of this financial year. And that is why I am a little skeptical that if you enter the stock right now, you will end up making money. I don't think so, Santo.
Well, I'll be more skeptical about the stock that you have on your watch list.
Oh, come on, Santo. I think it is defying your skepticism right now. Paytm, clearly, the stock has been able to hold on in a market like this. I mean, clearly, the last I checked, the stock was actually still in positive territory, despite the sort of sell-off we have seen overall in the market. And why not? The operating performance for the April-May, the 2-month period of April-May has been quite stellar from the company. If you look at the lending operations, loan disbursement jumped, 471% in April-May for the company, whereas loan value, or the value of loans, rose by almost 829% on a year-on-year basis. So clearly, the lending business is coming on its own at this juncture for Paytm, as the economy is normalizing, as operations are normalizing. Apart from that, the payment side of the business as well, where gross merchandise value is the key parameter, that itself rose about 100% on a year-on-year basis, which is pointing to me that the Q1 earnings, Santo, will clearly be a good, jump up on the Q4 performance that also came out to be quite strong for the company. So clearly, the stock is off about 20% from its 52-week lows, and the momentum is building as the management is showing the earnings traction also in its performance. So I feel with Q1 numbers so strong, and it is very likely that June numbers will also be quite good. I think this is one stock, one contra bet that you can definitely take in this market.
Well, CJ, now what is the story mainly about? Is it the payment side of the business or the lending side of the business?
It's both. It's payment and lending. The lending operations is something that is up and coming. Payments have, of course, is the biggest revenue generator for Paytm, and that will clearly be a big chunk of the revenue pie. But lending is where they can make more margins. I mean, the management is expecting to more than double its margin going ahead in the lending business. So that clearly will have a more impact on the EBITDA or the operating profit of the company than the payment sides going ahead. And therefore, I think that is why they have also suggested that in the next 6 quarters, that's probably by the September quarter of FY23, they will be able to turn break even on adjusted basis on the operating profit front. So clearly, I think they are showing signs that they are moving towards that goal.
Well, as far as the lending side of the business is concerned, CJ, since the company has already said that it does not intend to become a bank, right? That's what they last said, right? How do you really scale it up beyond a point? So far, the ticket size is pretty small. I think it's what, 5 to 10,000 rupees.
Yeah, they have actually seen improvement in average ticket size as well in the month of April and May. And for them, the game is all about scale, right? They can, as a distributor of loan, they can scale themselves up as much as they want, as they are doing it in the payment side of the business. So clearly, those small merchant loans that they're giving out, I mean, I'm not even talking about the consumer side of the business, but the merchant loans that they're giving out, probably with the potential market for their Paytm box that they have, that also in itself is so big at this point of time. The loans that they can offer to those customers is clearly a large pool out there that Paytm can cater to, and I think that is why also lenders want to utilize Paytm to also trim down their own costs, because now they have somebody like Paytm which they can use to increase their lending book, while the cost will be probably almost a tenth of that.
Well, we'll have this discussion again after 2 weeks. You know,
but
there's some bit of a technical bounce back there.
And it's not technical, Santo. I think belief is coming back onto the counter again. I'm telling you, you just wait and watch how it goes in the next 2 to 3 months.
Sure, we'll see that. So United Breweries, again a stock which has managed to hold ground in a very volatile market. Now, the fourth quarter numbers, according to most analysts, was not all that great. There were clear indications of margin.
You have been drinking a lot of beer these days. Yeah. Is that the reason you're so optimistic?
Possibly, that could be one of the reasons. Now, seasonally Q1 is a very strong season for beer companies in general because of summer, and there are two other factors which should help beer consumption in the country. Clearly one is demographics, that's we have a younger population, and you can also see that in the number of pubs and other things, and the increased demand for craft beer as well, which has been going up. So beer drinking is clearly in fashion. That apart, rising influence, as the society gets more prosperous, clearly liquor as a whole is one segment that tends to do well. Also, United Breweries has been trying to expand the premium beer segment. It's had quite a few launches out there. Lastly, very good balance sheet there. It's managed to bring down its debt, considerably, and also working capital days. So all put together, this is one stock again which could be an outperformer in this market.
I really doubt that it could outperform Santo, because in my opinion, I feel that you're missing the inflation picture here a little bit. With inflation being so high, with cost of everything, I mean cost of living increasing almost on a month-on-month basis at this point of time, I just feel discretionary spending could be the first one to take hit, and alcohol consumption, beer consumption, going out to pubs and all, vacations do fall under that category of spending. So for me, inflation would be a key headwind when it comes to the earnings of the company. When it comes to the stock, I think the entire concern around if states will probably try to compensate the lower VAT on fuel through a higher VAT on alcohol.
They're cutting excess. Punjab just did that.
No, Punjab has changed the system altogether. So Punjab is a different case. But other states like the southern Indian states or western Indian states like Maharashtra, they would want to offset some of the losses that they're taking through the cut on fuel, VAT on fuel. So there is genuine fear among the analyst community that going ahead, higher taxes on alcohol could be one way that state might try to compensate or improve their balance sheet or coffers at this point of time. And I think that uncertainty could keep a lid on the stock price going ahead for me.
If they further try to hike excise duty, it will only end up, further expanding the black market for liquor.
Yeah,
and even the states, even the states know that probably.
So that is the catch-22 situation, and that is why I feel that the uncertainty could be a bit of a.
So raise taxes and then get nothing at all. I think
possibly. One stock where there are no such concerns clearly is Motherson Sumi Wiring. Now this is another proxy play to one sector that Santo is quite optimistic about. Santo is the automobile space. You have been talking about stocks there where prospects are improving. Clearly, the cyclical recovery that is in the offing in the automobile volumes is going to be a beneficiary for Motherson Sumi Wiring. Now, this is a company which derives 95% of its business at home and has very little exposure to the export market at this juncture. So, and given that they are into the wiring harness business, that is something, a critical component of all automobile manufacturers, And as volumes for auto companies rise, they will also see an uptick in volume. Moreover, Motilal Oswal Financial Services expects a 23% annualized growth in net profit of the company over the next 2 to 3 years. They expect more than 15% growth in revenues as well going ahead, while a very healthy operating profit line as well. Now, in the view of MOSL or Motilal Oswal Financial, the rich valuations of the stock at this point of time are also justified because A, the growth trajectory is quite good, B, they have a very dominant market share in the wiring harness business, and C, they are also a big beneficiary of the rising trend of electric vehicles out there, Santo. So clearly, a lot of good levers and tailwinds for the company, and this is one stock that actually could outperform in this market going ahead because of the strength of earnings and stability it's going to provide.
Well, not much of financial track record to compare, but my limited point here is that, with Motherson Sumi Wiring, it is again, it falls into that category of theme stocks. Okay. And right, theme stocks in general, well, not to say that they are going to go completely out of favor, because something like electric vehicles clearly is catching on, right? But the market may want to see how much valuations probably it should give to stocks like this. That is where I think the upside then could be limited. Good stock for the long term, no doubt, but in the short term, CJ, I'll maintain that all theme stories, wherever market was giving very high valuations, there will be a serious rethink. You're already seeing that, even in the case of companies which have good earnings visibility. So it's hard to see why.
Santo, I just feel my only point here would be that probably the high valuation could be justified by investors by this logic that whenever an auto cycle recovery happens, whenever there is recovery in the auto sector, you tend to get more delta or more outperformance by investing in auto ancillary companies than in automobile companies. Why? Because while a Tata Motors may make money, a Maruti make money, or a TVS might make money, a auto component manufacturer who actually supplies component to all three will actually end up making a much bigger delta on earnings. So clearly for me, that is the reason why I feel the rich valuations also that you're talking about from not only a trailing perspective but also from a forward earnings perspective could be justified here because of the growth that you're getting.
Okay. Well,
the last stock, Vedanta.
Among the big losers of the day, now the sentiment for the stock has again changed. That's largely because outlook on aluminium and zinc, which was very positive till about a couple of months back, that has also changed.
Yeah, something very strange is happening in the commodity markets at
exactly.
This point of time.
I think both in the case of aluminium as well as zinc, analysts are saying that the market will continue to be in deficit. However,
exactly.
there's a limit to which prices can rise to the previous levels that you saw in March. They're not going to go there in a hurry. Already they have come off quite a bit. This despite the general acceptance that both these commodities are going to be in deficit for the rest of this year. That said, zinc and aluminium, they are among the major growth drivers for Vedanta, and so it's not very surprising that the stock has taken a bit of a beating. Probably it could also have to do largely with technical factors. A lot of HNIs and institutions had taken exposure to the stock. Given the change in market conditions, they must be jumping out in a hurry, which is kind of adding pressure to the stock. But all things put together, this is a stock which could possibly underperform in the short term. And lastly, you also have the issue that corporate governance track record of this company has not really been all that great. So this is something again to watch out for.
Well, Santo, my limited point on Vedanta, of course, I clearly take your point about the near-term headwinds. My only limited point about Vedanta would be that given that it's a commodity-heavy business, and given that at this point of time the commodity markets are scared of the C factor, what I call the C factor is the China factor basically. At this point of time, all the outlook on pricing, on demand is dependent on what is happening with China and its COVID-19 strategy. If there is any relief there, I feel that commodity prices could bounce back anytime, later this year. But if there is no relief there, then probably commodity prices have peaked for this year after that Russia-Ukraine war, and we may be in for more downside there.
Well, a quick look at the market, CJ. So that finally that big support level of 15,600 odd, that's been broken today.
Yeah, definitely. And Santo, I mean, if you look at some of the levels at this point of time, the Sensex and Nifty are down clearly more than 2% at this point of time. Nifty is now categorically below the 15,400 level, support level. Now, this was also an important technical support for the index, and it will be interesting to see how we open tomorrow. I mean, clearly we're going to close below that level at this point of time, but how we open tomorrow will be very critical. Whether there is more short positions being added into the market that could take us towards that 15,200 and 15,000 level going ahead will be very crucial. If you look at the mid cap space, that has also had taken a pounding today. I mean, 2.34% decline in the Nifty mid cap 100, whereas the Nifty small cap 100 index itself is edging closer to a 3% cut on the day. Banking stocks, realty stocks, metal stocks are the big losers, Santo, at this point of time.
And also you have the Dow and Nasdaq futures down in a big way, and if the sell-off continues there, then probably we could be looking at fresh 52-week lows for Nifty. Already the one-year return has turned negative, and that's a very crucial factor here, because it might make many investors rethink their investment. Although it's good to say that everyone invests for the long term, and in the long term equities is the best asset for returns. However, in the short term there is also some bit of pain when you see your investments yield negative returns.
Santo, don't worry. We retail investors have we have diamond hands, so we are not going to be so bothered at this point of time because we will not be panicking like in the past. The way you would have seen.
Retail investors said that in '99. They said the same thing in 2007, in 2018. Of course, yeah, they've got dime.
I'm telling you, right?
This is a one-way street.
We have diamond hands, Santo. We believe in the hodl philosophy. We have diamond hands, so don't worry.
Okay, we'll see about that. So, what else do you have on the horizon, CJ?
Well, Santo, of course, the Fed meeting it out of the way, but the Fed will still remain in action. Apart from that, other central banks are also in action. The Bank of England's monetary policy outcome will come later in the evening. So that will be very crucial for the market. Apart from that, in the US, you will have the initial jobless claim and the housing starts, data coming out for the month of May. Two very critical data points: one on the labor market, then two on the property market, which is one of the biggest drivers of the US economy. So two critical data points in the US overnight in the evening, and then tomorrow we will have the Fed Chief Powell also having a speech at a particular event, and it will be very key to listen to him and see how his reaction would change to the market's reaction to the outcome of the Fed monetary policy yesterday. So clearly, a lot for the investors to look forward to.
Some more surprise reactions from him?
Let's see. I don't think that he will be changing his tack at this point of time. I think he will maintain that probably the Fed is after inflation at this point of time. Now it remains to be seen how aggressively his comments are in that in that direction.
Well, thank you. With that, it's a wrap on this edition of Markets with Santo and CJ. Hope you enjoyed watching it. Do let us know about your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your news, stay tuned to Moneycontrol.com and the Moneycontrol app. We'll catch you again live tomorrow 9 a.m. with all the overnight action and how the trade is setting up.